And even these people who I would say are pretty close to 100% mechanical traders who stay in the flow for long periods of time, it got too much for them. And they stopped investing. They pulled out. They said they're taking 100% of their money out of the market, going to sit on the sidelines and wait and see what happens. Because of their worldview, they knew what was going to happen. Could only be in one direction and not good for them. I make that point because that's what we say all the time in our trading, in our training. And Dave and I repeat it ad infinitum, in these sessions, in Dave's sessions that he does as part of the Learn to Trade Properly webinars. And we've been saying it for years and years, and still, people still struggle with it. And what have they done? They've worn some or part or all of that drawdown, and they've foregone all of the run up. Because why? Fundamental truth number 2. You do not need to know what is going to happen next in order to make money in the market. We, over and over again as human beings, think we know what's best for us. And in some parts we do, but not in all parts of our life. Just because in one part of our life we are correct in what we think we know what's good for us, it doesn't mean it's going to be the same in the market. I just know from the traps how negative people have been around about the markets for so long. But the other thing to point out over here, which is the theme, is this is a breakaway gap to a new all-time high. This is important. This is big stuff, right? Now, there's no 100% dead cert that this is going to carry on and just go gangbusters. It could be resistance anywhere. Of course, there are variables going on all over the world all the time. Anything can happen. But on a probability basis, looking at technical analysis, looking at charts, and having done this for 35 years now, I can tell you that when you have a gap like that to a new all-time high ever reached, that is significant, and you should be in the market. If you are somebody that watches the market, keeps an eye on the market, has been active in the market for weeks, days, whatever, particularly if you've been in the market for decades, you do not want to not be in the market now. I don't know how else I can say that. This is significant, and this is not the S&P 500. This is supposed to be the risky part that follows, if you like, what the broader, like an index like the S&P 500 should do. So if the highest risk part of the market is making new all-time highs at a breakaway gap, you ought to be taking notice, and you should be in this game right now. You should be in the flow, and you should be following whatever process it is that you have. You should be in it.